Happy St. Patrick's Day, everyone, out in Humble Land. And we are going to be celebrating the green today because guess what returned today? What returned today was the market went up. Who knew? Who knew that could happen after about 2 weeks of seemingly constantly going down? And I know we're all happy to be having a day where we're back in the green, and what an appropriate time for St. Patrick's Day. So here's a look at the chart for today. We started off pretty low. We had a low on the day of $2.49, a high of $3.54. And throughout the day, we were going mostly up. We hit that high point just about a half an hour before the market closed, and then we had a little bit of a sell-off, and we closed at $3.12. But of course, we were below the $3 mark when we started the day, and then went down. And here's a low part about $2 into the trading day. We also have seen the forwardly going up today, and that, which was also depressed of late, had a low of 44 cents, a high of 64 cents, and closed, as you can see there, at right around 60, just under 62 cents. The other thing that we saw, which we had not seen in recent days, was a heavy volume. So if we go back to Humble here, and this is the Humble chart, let me move that over so we can see the volume. And you see there, I'm going to raise this a bit. Look at the volume today, 17.3 million shares traded. And what we have been seeing, and I've covered the low volume over the past number of weeks, what we had seen in the past was volume in the neighborhood of about 4 million shares. So this is 4 times as much. Why does that matter? I say conviction, but I want to be clear. If you have a bunch of people buying, as we did today, then you have a whole lot of people with money locked in at a certain price. Now, it closed at $3.12. Some people bought above $3. Probably a lot of people bought below, but as it was rising, they didn't buy at $2.49. They probably were buying at $2.55, $2.60, $2.70, $2.80, etc. So when it goes down, typically they're not going to want to sell at a loss. And so when you have the volume of what we had today of 17.3 million, that gives you a support level, because people, as I said, tend not to want to sell things at a loss. So that said, what else? We mentioned, I had the wrong stock there. We mentioned High Tide the other day. Someone wanted me to look at this as a retail chain in Canada selling cannabis, aka marijuana. Not really much change there since we did a story on it the other day at 62.5 cents. It's still right in that area, and this is the one-day chart for it. It looks a little bit dramatic, but it really isn't, because if you look that during the day here, we were at like 60 cents and it closed up 2 cents. Let's look at a 5-day chart and then a 1-month chart. So kind of choppy. I think, look, I am not putting, for myself, I'm not putting this in the same category as I am for Humble. I mean, Humble is different. So we did the story this week, yesterday, of Aria. I think I'm saying that right, trying to get the terminology down. Anyway, we had Aria deal in Chile, and we talked about that yesterday. I would have thought yesterday we would have gotten the pop that we got today, so we're delayed for a day. Now, there might be other reasons that I'm unaware of, but in any event, it's good to be up, even if we go down tomorrow. I think it's a reminder where you just feel beaten down. And I know I had some comments on the YouTube channel here where it's like, this stock is consistent. It goes down every day. Well, folks, you know, as I've said so many times, and I thought about running a clip of what I said 2 weeks ago in a different version of this talk. You know, we're still in the first quarter, and we're going to have the ticker, and, you know, the fact that we saw Aria means they're doing deals. So we've got that. Let me see what else here. I was trying to get something together and get it out a little bit. The oils we talked about, didn't click. Here's DIG. This is a 6-month chart on DIG. It was up but slightly today. Let me go to a 5-day chart. I think I was telling you the other day, and I have talked about selling, taking a little bit of money and building up your cash reserves. So I mentioned the other day that I'd said to my friend, you got 600 shares that we bought at 63, sell in increments of $10. So we sold some at around 130 or so. We sold 10 the other day at about 142. You see there is a high in the last 5 days of 144 in the last month. You can see this is the chart. We were selling kind of at this peak right up in this area. So it's down, but you know, it was up today. It was down from where we sold 10. But the thing is, we didn't sell all out. What we did is we sold a portion. And I use DIG here as an example because some of you have bought DIG because I've talked about it, and I think you're going to do fine on that. There's also Gush. I don't have a chart right now of Gush. But this is oil. It's a leverage ETF on oil and gas, if you haven't heard about before. And I just think it's impossible for us not to buy more oil and gas. Now, what could go wrong? Part of what could go wrong is the Biden administration is so hostile to fossil fuels that they could do something to try to throw a monkey wrench into the gears on oil. That could have a negative impact. I remind people that Joe Biden is not president of the world. He's president of the United States, and that even if he does something anti-fossil fuels, that doesn't mean that other nations are not going to be using oil. And frankly, whether it's electric cars or Biden administration's policies, we're not going to get away from using oils probably in my lifetime, probably in your lifetime. Maybe we'll get to a point where we don't use as much, but that's not going to happen in 2021. I am not necessarily granting my best wishes on 132 or on DIG and Gush indefinitely. I'm not giving them the blessing that I give to Humble, which is a 3 to 5 year and maybe more time span. But I am blessing these oils as a comeback recovery play. Okay, so there's that. Now, I have a chart here that I meant to bring up the other day. And let me get myself out of here. So when we have bad news, folks, this is what I want to say. We went through 2 weeks of whining and crying, feeling down because Humble had gone up and then came down, and 2 weeks in, we're like, oh gosh, please go up. And I'm happy it's up today. But my point here is that, let me get this. Here's a 50-year chart, and you know, over the years, we're going to have bad news. We're going to have election go the way we don't like. We're going to have tax policy go the way we don't like. And this is from 1970 through 2020, 50 years of the S&P 500. There was a lot of bad news in this time period, folks, a lot of bad news. I mean, we had the Vietnam War going on, Nixon resigning from office, Carter coming in. Clinton being impeached, 9/11, just one can go on, and yet look at how the American economy grew over 50 years. And I think we're going to continue to grow. We see people like Elon Musk, who is not from the United States. He's from South Africa, but he came here. And why did he come here? Because of our freedom, because the dynamic nature of the American economy, because there is no other place in the world like America that can offer an entrepreneur like an Elon Musk, like Bill Gates, like so many others over the years, to come and to be free enough and have the capital markets to invest in growth and the dynamic changes. And when we're investing in Humble, to bring it back to that, it's the same deal. Now, Humble is opening up their own version, the transactional tools that they're doing. I'm trying to edit this as I'm speaking, in second world countries and third world countries. And I think Humble is going to really make a difference in those economies. And the deal in Chile yesterday, Chile, by the way, is a very good economy. It's a very developed economy, very smart, educated people. We tend as Americans, for some reason, not to glance at the globe south of us. We tend to ignore Central and South America. We go to Europe, we go to Asia, we go to Australia. When's the last time you heard someone going to Brazil or Argentina or Uruguay or Paraguay or Chile? And yet, I think it's very positive of Humble to be opening up markets there, and we see that, as I said yesterday, and I think that's a good move. Now, the other thing I was going to say that did come today, and let's just do a little bit of economics. We talk about money and politics, and this is a combination of the two. We had today the Federal Reserve. If you don't pay attention to this, you should pay attention a bit. You don't have to become too geeky. But the Federal Reserve is one of the ways, the primary way that we control interest rates, through the control of the money supply. Jerome Powell, the Federal Reserve Chair, had a press conference today after the Open Markets Committee, the Federal Open Markets Committee meeting, otherwise known as the FOMC, Frank Oscar Mary Charles. And what Jerome Powell said is that the Fed's going to continue to hold interest rates low, between the prime between 0 and 0.25% on the Fed funds rate. Those are the rates they charge banks. So as long as those are low, the banks can keep their rates low on things like home and cars and the rest. He said that right now we have 6.2% unemployment, at least as of February. He was quoting February. I don't know why he didn't look at the March number. He thinks unemployment will be 4.5%, so that's down from the current rate at the end of this year, and about 3.5% at the end of 2023. We will see about that, but I think for him to say he thinks it could get down to 4.5 is reasonable because we're reopening the economy between now and then. So that's the primary thing that we would take away from that. So the Fed funds are going to stay low. If you want to buy a house and stay in it for a long time, if you want to buy real estate, rental property, this is the time to do it in terms of you can lock in 30-year loans. And by the way, my advice, I said this to a friend the other day looking to buy a home. When you can borrow at approximately 3%, 3.5%, I would borrow for 30 years. Don't take a 15-year note. And you go, but I'm going to save all that interest if I borrow at 15 instead of 30. When you take out a 30-year note, there's nothing to prohibit you from making extra payments. If you want to pay your house off in 15 years, you can. You want to pay it off in 10 years, you can. But if something happens, someone who owes you money in a business or whatever, if you get laid off, you're going to be happy that you've got a lower monthly house payment when money's tight. So stretch that out to 30 years. I'm not going to go off on the real estate tangent here too much. So folks, it's good to be back in the money. And I hope as we go along, I meant to bring this up a little earlier. If you are liking this, do me a favor. Let me bring this up. Give me a thumbs up if you want, but what I really like is share this, share our talks, our channel with your friends. If you think they're going to benefit by this, do that. I'm not sure who else is telling you about the FOMC or who else is telling you about the 50-year chart in the S&P 500. But what I want you to know is that my goal, as I've said before, is to get you to make money. Get you to make money by having you learn the market. And part of what I think we've learned of late so far this month, and this has been a tough month relative to Humble, but it's a lesson beyond Humble. And the lesson is you got price, things you're going to invest in, they go up and down. If the company is good, the company you're buying is good, and it has a good growth story, then hold on to it. Even if the price is down, hold on to it. And if you can afford to, maybe buy more. Don't go too crazy. You never want to walk all the way out on the edge of one limb. You want to have some diversification, which is why I also bring up things like DIG and oil and, and other things that we've talked about. But ultimately, I want you to get wealthier. That's our goal. That's my goal for you, to not to panic, to control the emotions, to buy and hold through bad times, maybe buy when the market is down. That's what you want to do. And then sell if you want to take some money off the table, and you should from time to time. Look at this chart. Look at the dips. Had you bought in those dips, you would have been making money. That's when you buy. And when you sell is when you get up to the top. You don't have to get all the way out of a position, but you can ease up and make money that way. So here we are on St. Patrick's Day. Happy St. Patrick's Day. I know I said that all the weekend, but happy St. Patrick's Day today, which is the day. And I hope that we are going to have a great month ahead. I think we will, because I think we're going to continue to have news events coming out. I wish, Humble, if I was going to say anything to Brian Foote and the others at there, it would be good to throw us a bone now and then. You don't have to tell us about some secret negotiations going on, but try to give some kind of an update. What happens when we get into these deserts, these news deserts on the stock, is people start listening to a lot of rumors going around and the naysayers. And folks, the one thing I would say is just most of the time those people, and I had one on the channel yesterday, this thing's going to $1.50. They don't know what they're talking about. So you got to learn just to tune those people out. There's always going to be intellectual and emotional static. Keep your eye on the ball, where we're going. I can't tell you the exact price where we're going in 2021. I tell you it's going up, okay? It's going to go up. Are we going to have times when it goes down? Yep, just like we have the last 2 weeks. Might go down tomorrow. I never know where we're going in the next couple of days. But I think I have a pretty good feel for where we're going in the long run, and that's what I'm keeping my eye on, and I want you to as well, all right? For now, folks, lovely talking with you. Go out and have a dark beer and some corned beef and cabbage or whatever you want, whatever turns you on. And don't forget, as you go up, if you want, whether it's on Humble or DIG or something else, if you hit some peaks, sell 1 share, 2 shares, 10 shares, try to build up your cash positions. And we see why when the stock goes down as it did over the last 2 weeks, this is where if you didn't have cash, you couldn't have been buying more. So have a great day, and we'll hopefully, God willing, see you tomorrow.